Welcome to the YouTube channel Alexandru. On this channel you will find information, details and very important news about cryptocurrencies, businesses, places from where you can earn money working online. In today's clip we'll talk about Bitcoin or gold. What should we invest in? Introduction. Since its creation in 2009 by Satoshi Nakamoto, the price of Bitcoin has skyrocketed, attracting worldwide attention. As of April 2021, Bitcoin's market cap has crossed the $1 trillion mark. This has led many investors to turn to the popular cryptocurrency as a store of value when comparing Bitcoin to gold. Traditionally, investors and commodity traders have stored their wealth either in property, stocks, bonds or gold. Gold has generally been a safe hedge against rising prices over long periods, but digital currencies are a new asset increasingly seen as a store of value in addition to being a means of daily transactions. As a result, Bitcoin has gained the reputation of digital gold. Point 2. What is a store of value? A store of value is an asset that can be repositioned and retrieved without losing its value over time. Using this definition, it is obvious that fiat money is a weak store of value. Cash is useful as a daily medium of exchange and as a way to hold short-term liquidity, but it does not hold its value well over time. More than 50 episodes of hyperinflation have been recorded in various monetary systems around the world. Hyperinflation occurs when money loses its value at a rapid rate, about 50% per month. It is characterized by a sudden increase in the cost of goods and services and a corresponding loss of purchasing power. While hyperinflation is rare in developed countries, inflation itself is quite common. Inflation is a standard tool used by governments around the world to control the money supply. Governments devalue their currencies slightly each year as a way to encourage people to increase spending or investment in the hope that this will stimulate economic growth by creating more jobs. This means your money loses value over time, so storing your wealth in an asset that maintains its value is the only way to keep up. This is why people invest in stocks, bonds, real estate, and other assets that have a chance of appreciating or holding their value over time. Therefore, having an asset that is immune to market changes is essential. This is where the Bitcoin versus gold. For thousands of years, gold has been the world's primary store of value. It survived the monetary systems of countless empires and city-states, many of which no longer exist. Investors typically turn to assets like gold and Bitcoin during periods of market turbulence because they don't move with the rest of the market. In fact, their value is likely to increase in adverse market conditions as investors move their funds in droves. 3. Why is gold a popular store of value? Before even comparing Bitcoin versus gold, it is important to understand why gold is so attractive to long-term investors. Money has been used as a medium of exchange since human civilization realized the limits of the barter system. Various materials were used as coins, including bones, sticks, cows, animals, metal and paper. Only gold has retained its value and appeal over time. The first signs of gold coins in history date back to 500 BC. People appreciated gold because of its unique properties and beautiful appearance. They see the precious metal as a means of passing on and preserving their wealth from generation to generation because gold is an inert metal. It does not oxidize, rust, or react with other elements. Its versatility also means that gold can be melted down and worked into coins. Throughout modern history, many countries have adopted the monetary system based on the gold standard, and the US followed suit in 1879. The term gold standard refers to a monetary system in which the value of paper money is backed by gold that is deposited in the possession of the government. Although this system is effective in combating inflation and deflation, it limits the ability of governments to freely print their own currencies. This became a problem for governments trying to finance wars. The United States began moving away from the gold standard in 1933. In 1971, to avoid an inevitable run on gold reserves, the Nixon administration halted convertibility, meaning that other countries could no longer redeem their dollars for gold. In 1973, the government abandoned the gold standard entirely. Eventually, the US dollar became the world's reserve currency, and many global currencies peg their exchange rates to it rather than to gold. Why is gold held in such high regard as a store of value? Throughout history, gold has retained its value as an insurance against uncertain times. Among the characteristics that add to its extraordinary value are durability, rarity, portability, convertibility, and emotional appeal. As shiny objects tend to be more appealing, gold also has practical uses. It has been used to make jewelry since ancient times and more recently to make electronic components. Supply is low, constant and predictable because gold must be mined from the ground and processed. Therefore, gold has a low correlation with other asset classes such as stocks and currencies. Investors wary of stock market swings have found comfort in gold. The precious metal has been useful as a hedge against market corrections. Even if its value does not increase, it tends to remain static while other assets decrease. These factors contribute to gold's long-standing popularity as a solid safe haven asset. 4. Why is Bitcoin a store of value? Unlike gold, which is mainly used to make jewelry, coins, and some electronic components, Bitcoin has no industrial uses per se. However, it can be accepted as a medium of exchange. Bitcoin is inherently a store of value, because it is durable and rare. The total supply of Bitcoins is limited to 21 million and there will never be more than this amount. Bitcoin is also a decentralized digital asset that operates without being controlled by central banks or governments, relying on a global network of nodes and miners that make this possible. This gives Bitcoin users some level of privacy and also increases its security. An ideal store of value should function as a medium of exchange so that it can be converted as needed. Bitcoin is exchangeable because it is fungible, portable, divisible and widely adopted. If you got here to the end of the video I presented on my YouTube channel at Alexandru, thank you for watching the video. I hope it was useful and I hope it helped you in some way. If you liked this video clip I would be happy if you like a share and subscribe to this channel. Only good regards, Alexandru YouTube channel creator.